where the price is moving below the 50 EMA, such as in this chart for example. The strategy starts once the price breaks above the 50 EMA and the candle closes above it, as you can see in this chart. So the first step of this strategy is complete, a break above the 50 EMA. Then we're going to wait for a pullback. However, we only consider a pullback a real pullback when we have at least two opposite candles coming down. So that's two back-to-back red candles after we broke above the EMA. Once we see that happening, we draw a horizontal line at the swing high point before we see that pullback. Then, after we see the two red candles, we're going to wait for the price to break above the horizontal line. But remember, the body of the candle needs to close above the line. And when that happens, such as it does here, that's when we buy. But even when the setup is perfect, a trade is not guaranteed to be successful. And that's why we need to set a stop loss to limit our risk. To do that, we add one more tool to our strategy. So, on TradingView, go to Indicators again and type Chandelier Stop. And click the one right here by Pip Charlie. Once it is applied, we place the stop loss of our entry at the chandelier stop. In this example, that would be right here. We then set a take profit target at double the stop loss, which is right here. Now, while the setup can look perfect, that doesn't always mean that it's a good trade.